What's going on, everybody? Thank you for tuning into this video. We're going to go over the keys to become a better trader. We're also going to go over crucial points that I feel led to my success in trading. And by the end of this video, you're all going to have a good understanding and foundation of what actually matters and the crucial points that you have to implement in becoming a better trader. If you're new here, make sure to hit that subscribe button. And if you want a very good trading resource, I'm going to link my Instagram in the description below. I post daily trading recaps along with very good trading tips and tricks. The link to this will be in the description below. You are definitely missing out if you're not following it. And now, without further ado, let's get right into the video. Keep an open mind with all these points we're going to explain because these are all things that I attribute to my success in trading. The first one, and the most important, because this is basically the foundation to the house. This is the thing that you have to build and add upon to become better. And you have to understand how the market facilitates trade. What I mean by this is the stock market, the future market, the option market. All it is an auction process where buyers and sellers facilitate trade and they exchange goods. The market will only move because of supply and because of demand. It's economics 101. This happens in the car market, real estate market, whatever market that facilitates trade between buyers and sellers. The main reason that price goes up is because demand will exceed supply, and the main reason that price goes down is because supply exceeds demand. Think about real estate in this case. Right now, real estate is booming. Houses are going for above what the sellers are asking for the house, whatever they're offering for the house, and that's because the supply is very low and the demand, the amount of people that are looking to buy a house is very high. So when the demand is high for something and there's not a lot of supply to meet that demand, the supply, the people that actually have a home or they have a stock are going to sell it for a much higher price until that demand meets the equilibrium between supply, and then the market will balance out. Basically, the strategy behind all my trades is supply and demand. I look for imbalances in the market and I trade these imbalances. There's no indicators involved. A lot of traders get sucked into day trading, scalping, swing trading because they have a bunch of traders thinking that they have a holy grail. They're posting the MACD, the RSI, oscillators. I'm not going to bash them, but indicators do not influence price. Indicators lag behind price. Price will always lead these indicators. The indicators move because price is moving. The indicators themselves are not the only influencer to price. Price will only move because a buyer bought something and a seller sold something to that buyer, and vice versa. So understand that, because that's the only way the auction will facilitate trade. Now, once you understand the auction process, you have to understand the market's context. So the market is very contextual. If you've all been following me for a while, it's something big that I stress. No market is the same. No day, no week is going to be the same. It's an auction process. So something that we saw yesterday might not work out today. It all depends on the context of that day. How are buyers and sellers? Are buyers very strong? Are sellers very strong? Is there momentum? Is there volume? Is there volatility? Is there a catalyst? Are buyers failing to stay above the high? Are sellers failing to stay below the low? Are we in equilibrium? There's so many different factors, and the market will spit so many different variables at you, and you have to understand what it's spitting at you, and you have to put the pieces of the puzzle together, formulate a trading plan around the auction process and what the market is basically telling you. And that brings me into my third point, which is eliminate all the noise. Trading is very, very noisy. Exactly what I just said before and the points that I mentioned. You could be looking at 100 different stocks, 100 different indicators, 100 different news sources, 100 different traders on Twitter. It gets very noisy. You're watching the market all day long. You're watching price go up, price move down. So the market, like I said, is always spitting so many different things at you. So the best way to eliminate the noise and focus on the present moment is creating a plan, sticking to that plan, and most importantly, trading what the market is telling you. The best way to trade what the market's telling you is understanding the relationship of price and volume, which is essentially what the course I created all has to do with: supply and demand and the volume to price analysis. You have to listen to what the market's doing. It's the greatest storyteller. You as a trader will differentiate what the market is telling you, and your subconscious mind might tell it in a different way, tell a different story, and that's when traders take the biggest losses, is because they do what they want to do instead of doing what the market's telling them to do. If this video gets 981 likes, I will make an in-depth video for every single point that we're going to go over. So what I mean about creating a plan and sticking to that plan and trading what the market tells you is you don't deviate away from what you came up with and the levels that you pre-planned before the markets open that are your areas of interest. All my supply and demand imbalances are on this chart here are areas where I want to be active in the market, and I wait for price to tell me when and actually to be a participant in the market. So my plan, I post these every single day in the Discord room. I post every day on the S&P 500, and any equity that has a setup, any stock that has a setup based off of supply and demand, I will post as well. I chart the S&P future /ES and trade SPY options around it, or I'll trade the future contract outright. But the plan today was I wanted to be a bull above 3898. That was my line. We had supply above at 3918. We also had demand lower at 3880 and 3866. So if we got below 3898 and the pre-market lows, the next demand that we had that we wanted it to act like a magnet and gravitate towards is 3880. So keep those levels in mind. And now let's go to the chart. And this is where removing the noise comes from and just trading what the market's telling you. So here we have our levels. Let's act like the market's not open yet. Let's zoom this out a little bit and go like this. So we had supply, we had demand lower, and I usually will never play, I won't say never, I usually don't often play puts if we break below demand. It really depends on the context of the market. But this 3900 was a strong area where we had buyers priced into the market. So if we got below it, those buyers would have been underwater and they would have fueled a further sell-off to the downside once they got stopped out. So we had our 3900, we got the pre-market lows right here. The first, let's just call it 20 minutes of the market open. Let's just call it the 10 minutes of the market open. We had very strong selling pressure, as you can see here from the volume bars. We got below the 3898, got below pre-market lows. We got below this demand zone with very strong red-bodied candles to the downside. The following candle, we broke below demand and then sold off right into the 3880 demand zone. So beautiful short setup once we got below the 3898. I know some members did take this opening drive short to the downside. They took SPY puts. And then right at demand is where I took the market long today. Followed my plan. Everybody was super bearish on the market. A 30-point sell-off, 25-point sell-off, and the first 20 or so minutes of the market open is pretty aggressive, but no reason to panic. We had demand down here. Now that we're below this demand, this becomes invalid, and I took this trade long for a nice rally out of this demand imbalance. Even if you go to a 1-minute chart, you would have saw a nice head and shoulders pattern, inverse head and shoulders, where we had a left shoulder, a head, and then the right shoulder. So very strong bullish confirmation at demand, and this thing pretty much rallied all day for a nice move until we hit the supply and demand, or we hit the supply imbalance. As soon as we hit it, look at that volume. I love to see volume confirm it, and we had a nice end of day sell-off going into the weekend from demand right into supply. There's multiple different ways you can play this. That's why trading is not a one-size-fit-all. Just stick to your plan and do exactly what the market's telling you. Point number 4 is you have to stick to one trading strategy. It's normal for traders that are just beginning to try to jump from one strategy if it doesn't work out to the next, to find out that no strategy works. The one point that I want to leave you is that no strategy will ever work 100% of the time. Win rates really do not matter. What does matter is risk management. But you have to understand and you have to build upon one strategy and stick to it that focuses and has a strong influence to risk management. Because in trading, you have to learn to lose in order to win. This is a big one. You are going to take losses. I know traders that have taken $800, $400, $600,000 losses in a single day, and they wake up tomorrow and trade the same exact way and the same exact thing. They fight to live on another day. You have to manage your risk properly, and you have to protect yourself because you can't have one large win or one large loss affect, let's just say, 3 or 4 or 5 wins. You have to accept to lose, and it's human nature for us to not accept it. We always want to win, we always want to be right. But in trading, you have to leave your ego to the side and you have to learn to lose in order to win. Another one is you have to learn yourself. A lot of traders don't know themselves. They try to learn the market before they know themselves. In my opinion, you have to learn yourself first. You are your greatest enemy. Your results are a product of you. You have to keep your emotions out of the picture. You have to be patient. You have to be disciplined. You can't let your fear and greed affect your decision making. Like I said earlier, your subconscious mind is going to be like another human sitting at the chair next to you. And your subconscious mind is going to try to affect the decisions that you're making based off of what you're feeling and your emotions. So you're your greatest enemy. Your results are a product of you, nothing else. Like I said, leave your ego to the side. And the last one is journal. I can't stress how important and how my trading did a 360 once I started journaling my trades, journaling and reviewing the market, reflecting on it, and putting it into action, because that's when the biggest growth occurs. You have to see what you did right, see what you did wrong, build upon it, remove it from your trading, whatever it is, then you reflect on it and put it into action the next day, the next week, the next month. That's when true growth occurs. If you're just sitting in front of the screens watching the market go and you're not learning anything from it, there's going to be no growth and you're just going to be stagnant. You're never going to see your account do anything. The work that you put in after the market's closed, it really is what matters the most. I always say this, that it's really with anything in life, but it's not about how hard you work, it's about how smart you work. Are you learning the proper things about the market? Do you have the right guidance? Are you just learning fluff? Are you not learning the right things? Are you disciplined enough to put things into action, reflect on it, learn from it? Just work smarter. Do not work harder. You have to think outside of the box a little bit with trading. If 90% of traders fail, don't do what 90% does. Be different, think differently, and trade differently. So I'm going to leave you all on that. If you did enjoy this video, let's get 981 likes. I'll do a video for every single one of these points. Make sure to subscribe to my channel, follow me on Instagram, and if you truly want to learn more, you stuck around, be sure to hit the link in the bio for my website. I offer a very in-depth course with a very good trading community. Besides that, I'll see you all later. Peace.